Not too good. Yeah, it was a very, very tricky week. I'll go over some of it. The reason why. Starting back up Monday, Luke. Sweet. What are you gonna trade, Luke? What pairs? Dollar CAD? Nice. You can't hear Sharon? I don't know what's up with that. It seems that Yvette and Luke can hear, so I'm not sure. It might be something on your end. Alrighty, we can jump into it now. Um, so let me go over a little bit of the correlation between the different pairs and why uh, it could have been not so good of a trading week. So if we're looking at the ES, look at the location of the ES in correlation to its previous all-time highs over here to the left. So we've sort of just been meandering up, holding this trend line here. So I can actually draw this trend line out, something like this. We've been holding that pretty well, pretty consistently, and we've been kind of just chopping up very slowly. Lots of times, this is what happens with all-time high markets on the ES. Uh, Not very often you will see a move like this where it does big bar up. In this sort of situation with all-time highs, you're more likely to get the big bar to the downside. And when you get the big bar to the downside, that results in more trading opportunities. Um, so typically, I prefer when the market isn't just making new all-time highs. I prefer when it does that big pullback, you get more trading opportunities. The range expands. So another reason why it could be doing this slow choppiness is due to the NQ and the Russell. So jumping over to the NQ, if you look at the previous all-time highs over here to the left, and we look where we are in relation to it, by the end of the week, we are very close to the same spot on the ES. So let me flip back to the ES. Previous all-time highs over here. And both charts look very similar now in terms of like absolute value of where we are on the chart. But the NQ put in massive moves almost all week to the long side. So what I stated before, it was either last week or the week before on the Sunday session, was the NQ has been weaker than the ES has been. And then this past week, it put in somewhat of a catch-up move. So if we go, this is just about from down here all the way up here has been the move all week. And it put in these big upside moves. And these were nicer moves to trade. But it was catching up to where the ES was because the ES had already broken the all-time high, and we just sort of meandered up all week. No big bars. And another reason the ES could have been slower was the Russell. So the Russell is 2,000 stocks in the stock market. So when we're looking at the tick and the AD line, we actually have the tick and the AD from the Russell because the whole point of the tick and the AD is they are the market internals. So the Russell comprises like almost all of the stocks in the stock market. So that gives us the best idea of, is the stock market healthy in total or is it weak in total? So this Russell chart gives us a good idea um, of that. So I also have this charted out on my own screener that I have. So I do this every week. So I'll do this again. I'll add this pair. So every weekend we can also go over the Russell as well. So the main four that I'm charting out are ES, NQ, Russell, US 30. So this played a really important role in my thought process for this week trading the ES. So as you can see, we have a couple ranges here. We have the range like this. There was a smaller range that formed here. And then we have a smaller range here. And then we have the big range like that. So we did not have the bigger range until this big Tuesday move to the downside. So we had this range that looked like this. And then overnight, Tuesday night, we had a massive move to the downside and then a massive rejection back up. So to me, what this indicates is it's a false breakdown pattern. And oftentimes, after you get a false breakdown, you can see upside range expansion. So we could see longs step in and push price maybe to the other side of the range. So that didn't end up happening in this situation. Um, but this was still signaling strong buyers stepping in. And if we have let me see here, if we look at this as well, key reference areas, one of them is buying and selling tails. So this developed a new buying tail, which is a key reference area. So this is super important. So a new level that I had marked out was right here. This was the previous low of the balance area. And then false breakdown, rejection all the way back up. And then we held here as support again. So on this day, we came down and then we broke out of it a little bit and then we rejected back up from this area. And then what happened on this day? We broke below it, pulled back, and then continued below it again. And now I would have this area marked out as well. This is our strong buying tail. And we can include the new support over here to the right as well. And this could now develop in a higher time frame, bigger range. Like this. So this helped shape my thinking a little bit because when we came into trade on Wednesday, I was thinking, okay, we could potentially keep going long because we had a false breakdown pattern in the overnight session on the Russell. But we instantly saw rejections after the market opened and it pushed down right back into this level. Now, this area here at about 1 o'clock correlated well with a level that you could have taken on the ES to get a long bounce from. And then on this day, which was Thursday, we were breaking below this previous range low and the false breakdown area. So I was much more cautious about aggressively going long on the ES on Thursday. I just didn't want to get in. Now, on the ES, when you have smaller ranges, so if you've seen the RTH range has been going down massively. So I think it was like 55 points to start the week, the 10-day RTH range. And by the end of the week, it was like 30 points, the 10-day range. Multiple of the days were around 25-point moves, which is very difficult to trade. One idea that you have to keep in the back of your mind is when we have bullish time frame alignment. So that means that all the time frames are up, lower time frame, intermediate time frame, higher time frame are all up. We need to be more aggressive with the longs. So I can't remember if it was Yvette or Sharon. Josh was telling me that I think it was Sharon, that you mentioned in the pre-market call that you do, that the more aggressive long levels were working a lot more. and it wasn't pulling back at all. And that's because of the bullish time frame alignment. So sometimes you'll have to take very, very aggressive levels. So when I'm charting out in the morning and I give you my levels, typically the closest levels of support and resistance will be based on the overnight session move. So let's see here. Well, we have to wait for the next overnight session to happen. But let's just say this was, let's say the market closed here, and then this was the total overnight session. This would be a level that I'd have marked out here, and then you could have another support and resistance through here, and then you could have your main resistance all-time high level here. Now, these levels for me are what I call like pre-market levels. So they're my overnight levels. These levels of support and resistance typically do not hold as well because the amount of volume transacted at these areas and turning points isn't as high because they're during the overnight session. So typically the RTH levels will be more important than the overnight levels. However, during bullish time frame alignment, these levels can still hold and work out because everything is going up. And that's what happened this whole week, basically. So instead of it pulling back to a better location, coming down and then going long, it was just doing shallow retracement and then going long. So that's just an adaptation. And the whole idea is you need to recognize that this is happening, but it doesn't mean that you have to trade it. So I don't like trading these times because the trades are too aggressive for me, and it hasn't worked well for me in the past. So I'm going to wait for my better locations, my better levels to execute on my trades. So this whole past week, I barely traded because I knew what the environment was. I saw how low the range was. So I just had all my limit orders set up at much better locations. And on a few occasions, it got very close to triggering me, but didn't. But the whole idea with it as well is if the range is much lower, you still have to make sure that you can get a good amount of R out of your trade, because at the end of the day, you're still risking 1 R, which will be the same amount that you're risking during regular volatility time. So if you can only make 2 R, but you're still risking your 1 R, that means that you're risking the same amount to make less. So do you want to be trading during these times? That's up to you. You can size down if you want, but it just didn't make sense for me to have a 8-point zone and to be looking for like 16 points back long. That's 2R. That doesn't work for my trading style. I need to be looking for 3R. Okay. So Yvette, you said not too good on trading this week. Um, what was your experience like? Why did you find difficulty with the trading? Were you trying to short or you were just trying to long and it wasn't moving anywhere? I went long, but got only 1 or half R or lost. Yeah. So the size of your stop as well has to scale with the range of the day and with the RTH, the 10-day RTH average range as well. So as the average range is shrinking and shrinking and shrinking, and you see the day opens with very small range, then that means that you need to be finding better location in the zones with smaller stop losses to account for the decreased volatility. RTH, it's regular trading hours. So you can see it on here on the bottom right of trading view charts. You have electronic trading hours, which is the 24-hour session, and RTH, regular trading hours, is only from 9:30 until 4 when the stock market is actually open. So if I click on the regular trading hours at the bottom, you can see gaps on the chart. These are all these little gaps. So what the gaps are the overnight session. So this is stock market open. It goes all the way until it closes right here. And I find this is a really good way, using the RTH on TradingView, to look at the types of days that we went over. So the variation days, the trending days, ranging days, balance days, all those different days. You can see them really well on here. I typically don't use this RTH chart though, but it is good to know when you have a big gap. So when the overnight session has moved a lot, so something like this, relatively big gap up, and it fills the gap, hits the level, and turns around. And then also what the gaps can be useful in seeing as well is, let's say we have a big range going sideways like this, and then the overnight session starts right here. So the previous day closes here, overnight session starts, and in the overnight session, we break out of the range and we're opening above it now. So the next RTH session will start above the previous balance area. That can then move us in a continued long. So you're breaking out of the top of the balance area. We saw buying conviction during the overnight session, but this area marked out will look like a gap on this RTH chart. So when you have a big gap breaking a big balance area, either to the long side or to the short side, it can result in continued buying or selling based on the direction you break. So when I'm looking at my averages, I'm looking for the 24-hour average, which is the entire day. So you can see it on a daily candle on the ES. So if I measure from the bottom of this candle to the top of this candle, 38.75 points. That would be my 24-hour range for that day. And then I'm looking at the 10-day 24-hour range. And then it would be measuring like these 10 candles, whatever it is, wherever the 10th candle is, right here. These 10 candles, the average of those. And then I'm looking at the RTH average. So how much can we expect it to move while the stock market is open? Because that's when we are trading. And then I wanted to just note one additional thing about our bullish time frame alignment and how I type it up on the Discord. So we have the lower time frame, intermediate time frame, higher time frame. So on this ES right now, intermediate is bullish. Higher time frame is also bullish. And then on the lower time frame, I don't know if you guys have seen on the different days, I'll put bullish or I will put neutral bullish. And there's reasoning behind that. So I can't remember which day it was during this week, but at one day we had opened the RTH session. So at 9:30 we opened at a new all-time high. So when we're already at all-time highs as we're opening, and the overnight session keeps making new all-time highs, it keeps going up, all of these will be bullish. All the time frames will be bullish. But if we see the overnight session make a new all-time high and then correct itself and come back inside again and do a pullback, it will be neutral bullish. And the reason for that is if we can make new all-time highs during the overnight session and continue it right at the open, it's more likely that we will continue to create new all-time highs. Instead of it pulling back inside again, it could result in a more choppy or range-bound session. It's just a small thing, but it does matter. Okay, let's zoom out and start drawing some levels and coming up with some ideas on this chart. I'm going to leave this trend line up. It's held decently well. You can move it to the right a little bit. Alrighty. I'll have a new level here, which is our previous all-time high. So we confirmed the bullish time frame alignment if we can re-break this level again. I included this wick on the left, resistance, 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 support, which is the wick in the closet right here, and then resistance over here. Now, this looks like it is starting to form some type of balance area. So we'll see if that can continue. I will have another level right here. And then this level on the inside can be your high volume node point of control area of the current balance area. So this move has been fairly directional to the long side. Big bars up in relation to everything else that we've had here. So we could measure from the bottom to the top with the fib line. And as you can see, we're holding the 61.8% fairly well. We haven't broken below it yet. So if we want to see the buyers maintain their control and their strength, we shouldn't see this get broken. And it would be a real warning sign if this level got broken as well. Because we have a directional move. This is starting to look like the bottom of balance area. And we could see downside range expansion into this next major support area right here, which was the previous all-time high. I also wanted to show you guys quickly using the fib tool. If you look at all of the major swings during the week, we hadn't broken the 61.8% retracement on any of them. So this was Friday's move coming into the Monday open. We pulled back. This was the overnight session, pulled back, and then we pushed back up during the Monday open, and we're able to make new all-time highs. But one of the signs that we were more bullish on this day was our pullback didn't invalidate this big long move from the previous week. And then if we want to look at this swing here as well, like this, you could put the line, or you can put it like this. From the bottom of this move to the top of this move, we pulled back into the 50% and extended up again. So that's another sign of a bullish market. It's not invalidating each of its new swings. So I will have another level in here, but this will not be as important as the level above it. And another level in here as well. And then this one to me is more important. I like this level because previous all-time high, this was a previous rejection area where we saw a big downside move from. And then this is the area where we saw a big upside move from. So all of it lines up fairly well with structure and directional moves. Let's see how we measure up on the higher time frame with Fibonacci lines, bottom to top. So we could pull back much further without invalidating the overall trend of the chart. But if we want to maintain more aggressive moves and more like stronger buyers, we shouldn't really pull back below this area here. level of support and resistance here, and also the breakout of this smaller range. This is the low of the balance area and directional move up. It's a good level. Buying wick, another key reference area when you get the strong buying wick or buying tail, whatever you like to call it. And then we have another buying wick, strong directional move up from here. These are all the levels that haven't even been tested from last week. So all of these levels will be the same. So one idea that I do want to mention is how liquidation can occur at these all-time highs and how we could see big downside moves. So we have to think about where people, banks, institutions, retail traders are placing their stop losses. Because when stop losses get hit, that can cause people to close their positions because you can see big liquidation in the market. So if we develop this new range at the all-time highs, if we break below these wicks here, this is going to be a big location where people will have their stop losses. I'm getting in long on pullbacks to the bottom of the range. And when we see price break below here, you could see a bigger bar, bigger candles to the downside until you get to your next higher time frame area. But if we break this trend line and we're breaking the range, it could be a warning sign for people and you could see bigger moves to the downside. Because when you get stopped out, it only increases the selling pressure because they have to now sell their order that they were long. I mean, those are going to be the main levels and ideas for the ES. So I'd be looking longs from any of these better locations. One thing I wanted to uh, tell you guys to be more cautious about when you're trading these all-time highs is be very cautious taking the breakout trades. Let me zoom in a little bit. So I think I saw on Friday someone took a breakout trade here with like a 5-point stop, looking for price to extend up because we're breaking the previous all-time highs. This is not a great trade. This is not the ideal way to be taking these breakout trades because we had already had a big move up. Our range was small, don't forget. 830 is news. So by the time you're entering the trade, you're 32 points up in like a more directional swing for the market. And we know that for the week, we were only putting in ranges of around 25 points once the market opened. So you're trying to take a long at all-time high. Yeah, there is no real resistance above. But the market for the whole week was telling you that we haven't been putting in a big range. We're going to have a smaller range week. And then you're aggressively trading a breakout. So breakouts are when you have lots of momentum in the market. And typically, the way that I like to trade breakouts is an opening range breakout. So what happens is the market opens. Let's say it's at the previous all-time high. So let's say we come up here. Overnight session, we move up. The market opens right here, and we get a range form for the first hour, hour and a half, 2 hours. And then we get the break above. The tick goes extreme to the long side. The ADD is maybe trending up the whole time. Maybe you see the NASDAQ moving up. Then that's a valid time to take a breakout trade. If you take a breakout trade here, we moved up, we already based, we broke out of this basing, pulled back, continued up, and then you're taking a breakout trade. So for me, this is either late because you can be entering here as a breakout. This really isn't a breakout trade at all by this point. And then one structure that I wanted to show you guys as well is right here, this little basing structure. So I don't think you've gotten there yet. I think it's one of the last weeks in the content that you're going through, and it's sequencing of events. So for me, this is one of the most important parts about trading, and it's how things occur in the market and how that changes your scenarios that you wrote up earlier in the day. So for me, the main trade idea on this day was not a breakout to the long side, it was actually a short. Let me go onto a 2-minute chart. You can see it a little bit better. So previous all-time high was somewhere around this number, 6106. And we were bullish up until this point. And then we saw this range form. This range is forming at an all-time high. And this was a break of the previous all-time high right here, this bar, this candle. And what you can do is on these breakouts, you can look for fake outs. Now, the fake outs don't work as well to the short side when you do have bullish time frame alignment. So this is a harder trade to take. But on this day, the Russell was breaking lower. And it had broken below. Let me just show you. Oh. So the Russell broke below its previous range that we're looking at. So you could be a little bit more bearish on the Russell. You made new all-time highs here, but you couldn't sustain the all-time highs. So what you could do is you could enter short here because this bar gave a closure below the breakout bar over here. Or like this was the break of the all-time high. You got to close below. And now you're taking basically a breakout trade to the short side because you're balancing at higher prices and you can't sustain those higher prices. So you can go short here, or when it pulls back into the point of control of this mini range, you could go short here with your stop above the high and then your hold price down. But I didn't take this trade personally because the range has been so small all week that it would have been really difficult to get any R out of this trade, taking the breakout. The way that I would have taken this is I go short here and my stop goes at the all-time high above this pivot, basically. And look, maximum on the trade for this day was only 1.7 R, which is not good. If you sniped the entry and got in higher, obviously, much nicer trade. But if you waited for that pullback, you don't know that pullback's going to happen. This is the real setup where you take the breakout because you had this range form. But this stopped me from going long anywhere at these prices. So for me, the way I think about the markets is the higher that price goes, the less I want to just get in a long. So once we've made a new all-time high, I don't want to just get in long. The higher and higher you go, the less favorable it is for institutions and banks to keep getting in long. Banks want a discounted price. They want price to come down to get in so it can go all the way up and then make new all-time highs. And then they make all of this money. They don't want to get in here at an all-time high and only capture this amount of money. That's why I like to wait for my better locations, my better levels. They could give bigger reactions and better R. So for me, this trade doesn't make sense because it's not like a true breakout trade and you're trading at an all-time high and you want to keep it going long. That's just too hopeful for me. Okay. Let me zoom back out. So that's pretty much this chart. Do you guys have any more questions on the ES? Any specific days where you had any questions? Any trades that you took? Anything like that? Any levels you have questions about? All right, let's jump into the NQ. So again, this is very similar to the ES. So we don't have as nice of a range form in here because we broke up again, which is fine if no range is forming, but it looks slightly different to the ES. I would have this fib drawn up. It did a small pullback already near the 38%. I would have a level through here, maybe extend it down a little bit. Resistance, 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 support. You can see the VWAP is here as well. And then we have our support and directional move. And then we're also going to have a level on the inside here as well. Move it up slightly like this. Support, resistance, resistance. And then this is a minor support area on the higher or on the lower time frame. The bar broke up, pulled back to here, and then went back up again. We'll have resistance here. I'll include these wicks as well on the left. This will be an important spot, and then this will be an important spot. I just want to include this buying wick here, and then where it pulled back to, and then started the directional move again right here, and its previous all-time high. This should act as a good level as well. And so should this. So this top level is, we have this basing structure. Top of the balance area, breakout area. And then that's when we saw the big move to the upside once we broke out. And it was also the previous strong resistance area. There was resistance, support, resistance, resistance. So a good area in the past. You can have another smaller level inside as your point of control. And then this area was previous resistance, but now is a strong buying wick, two strong buying wicks here, and the starting origination point of this major swing. This could be an area where we pull back to whenever we have like a rogue wick like this. Oftentimes you can see, like, for example, this wick could come down and touch it perfectly and then turn around. So I'll have it marked out still, but it moved pretty swiftly through this area to the long side. So I wouldn't say this is the best location. I would say that this location is a better zone of support because it acted as resistance so much in the past. I would move this up a little bit. This was the starting point of the major swing. This one was the breakout point as well. And then this is support and resistance. You could even include some of the stuff to the left here as well, including this wick. This was major origination point of this swing as well. Lots of support and then lots of support and resistance through here. So all those levels will stay the same. And then what we can do now is we can zoom out. We can pull the fib from the whole move. So it can pull back quite far. Now what I would do on this one is a little bit different with the fib as well, because this is like the major swing from here to here, but the more directional swing is either from here or from this point. So you can also have fib lines drawn from either of those. So it would just be like this, which this one lines up really well with the previous all-time high at the 38%, and it lines up with the 61.8% at this major directional move from here, or you could have it as the bigger one. But anyway, you could trade in between any of these levels, basically. That's what's telling you. These are good locations to be trading from. I would have this marked out as a more major area. And this one as well. So again, we have bullish time frame alignment on the NQ. So I would be looking for longs until it tells you otherwise. So most of the time when I have bullish time frame alignment, the only time I will take short trades is if we get like a basing structure like I showed you that you could have done on Friday on the ES, where it's rejecting an all-time high basically, or when you start breaking structure to the downside. So for example, this starts breaking structure to the downside, pulling back into previous support areas that are now resistance, then you can take short trades. Especially if you see broad market participation. So when I say that, it means that all of the charts are working together to do the same thing. So the ES, the NQ, the Russell, the US 30 are all headed in the same direction, and the market internals are also showing that. So if we're breaking a level on the NQ, we're breaking a level on the ES and the Russell and the US 30, the internals are showing negative numbers. So it's showing minus 1,000. The AD is trending to the downside. Then I could start to look for some shorts. I need, when you have bullish time frame alignment, you need a lot more odds enhancers in your favor to be taking short trades than you do long trades. So during the week on the ES, if you were watching the internals, it was actually quite a tricky week to read the internals compared to the past few months. It was probably bad timing to be learning that because I think that's one of the more recent things you guys went over. Um, so the internals a lot of times were fairly negative, but the chart was still going up. And the thing about it is the tick and the AD were not extreme negative. They were just holding slightly negative for most of the days. But when you have bullish time frame alignment, you can still see it keep going long. So ultimately, what matters more than the internals was breaking levels to the downside. And we couldn't even break the most aggressive support areas. So that's giving you all the information that you need. It's showing as negative, but you can't break anything on the chart. So ultimately, you can basically forget about the internals for that day and just focus on the chart. Sometimes they can be confusing. I have to say, I've been trading with them for like 6, 7 months, and that was one of the more confusing weeks of looking at them. So that was another reason why I just basically sat back and didn't trade too aggressively. But it also goes back to what is the Russell doing? Because the Russell was showing weakness for a lot of the week, doing this breakdown here, and then we saw it pull back up, another push down, another push down. So we had Russell being weak most of the week, NQ being strong most of the week, and then that causes the ES to basically like meander and kind of chop around sideways and slowly make its way up. It's kind of like the combination of both of those charts. That's why it was a little bit tricky. Okay, let me jump into doing this Russell quick, and then I'll do dollar CAD, gold, and then I'm going to jump into some slides I want to show you, some additional things that we added in the 10-week course. Okay, so here I could have a level here, which is the more recent high. I believe on the Russell, if you go back on the much, much higher time frame, there is still things to the left of it that are higher. higher resistance areas. I'm not going to do that because I think it's pretty far back. Now, this is a very significant level. For me currently, this level is more significant than the high above it because this level includes the previous high over here to the left. And look how many times we've used this area as resistance. So to me, it's more important when this level gets broken compared to the level above. And I can see when price does come back up, if it breaks this level, I think it can break the level above it as well and pull back and keep going higher. This will be your major support area. What you could do as well on this level is you could include the rest of this wick to the left. You saw this big buying wick here and then the move up. So you could move it like this and include a little bit more. And then your point of control here is like fairly big. It's not very well established because you have multiple ranges forming. So you could have a level like this, and then you could have another level like this as well. Let's use the indicator. Fixed range volume profile. I'm going to use it for what was the previous range forming here. And then you can overlay like another one on top of it and include this whole range. So it puts it in relatively the same position for both of the ranges combined. So we had a decent spot for it right here. And it works as support and resistance in the past as well. Now, on the zones on the Russell, since I'm not trading the Russell actively, to me, it's not about being like point accurate like I am on the ES. On the ES, I'm going on the lower time frame and really studying the levels and looking at them. Whereas on this one, I can be a little bit more flexible, and I'm looking at like relative zones, relative areas of where I think it can turn around at. And then if it breaks these important zones, then it's giving me information. But I don't need to snipe an entry on this because I'm not trading it. We can see resistance, support, resistance, resistance, resistance. And then what I would have here as well is you can see up move, pull back, up move, breaking the high. Are we just going to go sideways? So we're going to chop like this and go up. Or are we going to pull back deeper before we go up? Or are we going to create almost a double top M and come back down? So we have a few things that can happen. But this is our major swing point to the upside. So pulled back to around the 38%. And we're holding, going sideways right now. So we wouldn't want to see a break below the 61.8% here, which was one of our major support and resistance areas. So this becomes more important. This is also a very important level. This was where we ranged, balance area, top of the balance area, broke out from, pulled back to, and gave the continuation with a directional move. This was the starting point of the directional move. And then this is the bottom of the balance area. Lines up with the bottom of another balance area as well. And also as resistance. This is a good level. And then we have the low of the overall swing and like pivot. So these will be my major levels going into next week on the Russell. So if we break below this area, that would be a major warning sign for me in terms of um, the strength of all of the charts. So if this breaks below, I will be watching for the NASDAQ and for the ES to put in some downside moves and see if they follow or not, basically. Um, one sec, let me just get a drink. Alrighty. Question from Yvette. So you watched the Russell, but not the YM. Okay, so uh, YM is US 30. So the reason behind this is, I believe what Jody told me about the YM is it's like the 30 biggest stocks in the stock market at any given time. But anyway, it comprises only 30 stocks, and the Russell's 2,000. So if you want a better overview of how the entire market is doing, you would watch the Russell because it has more stocks in it, basically. It's as simple as that. And the ES is 500. So that has the next most after. Then you have the NQ, which is only 100. And then you have US 30, which is 30. But the NQ is like the tech sector. So the reason that the NQ can really, really rip and really go quickly is and the ES can move quickly at times as well. And this is what creates your fake outs is you can have really big stocks pulling the whole entire market. So Nvidia, Apple, really big tech stocks, and those ones can really start trending. And when that happens, that can move the ES by itself because the market cap of those companies is so large. But that's why we use the market internals because just because we're breaking out above a structure, that could be just because of 2, 3, 4 stocks giving us that trending move. Now we need to see, do all the other stocks also want to move in that direction? So then we look at the tick, we look at the AD line. Are they supporting the breakout that we're seeing? If they don't support it, you could be ready for a fake out trade. Alrighty. Okay, so we have this range. We have almost two ranges here. We have a range like this, and then we have a little bit of a smaller range like this. So I will draw the levels for both of them. So this is balance area low. It's also a gap, and it's the previous pivot. And then at the top here, we have balance area high. We have the point of control in the middle. And then we have balance area low over here. And then again, same thing with the NQ, same thing with the ES and with the Russell. You have this dominant swing in play. So you could have your Fibonacci from bottom to top and see all the relevant levels. I'm just going to highlight this one for now because that is the 61.8% level, and I can see it's a nice area. Most of our levels of support haven't even been tested because we were just going up this week and then going sideways. But one thing to note here, I believe this is the all-time high on the US 30. I believe there's nothing any higher. One thing to note is we are now balancing at all-time highs. So this could be a healthy balance before continuation because we did see a pretty big upside move all the way through here. Now the market is consolidating and balancing. So it's going to be very, very important to also watch this one. to determine, okay, is the Russell breaking below its balance area? Is the US 30 going to break below this balance area? Because if that happens, we could see the other markets also start to drop. Or are we going to see it hold the balance areas, break out, and we could see everything have bullish time frame alignment and just have continuations to the long side? So for me, this will be a very important level as well. And then this is all-time high level. And then we have all the levels that we drew from last week in here as well. Question from Rich: how do these markets affect the dollar? Okay, so you can look at the US dollar, but I do not use these to help me make my decisions on any of those futures markets. Um, when I was trading Forex, I would look more closely at the dollar, but whenever I was using the dollar, I found it very difficult to find the correlation between them. So I just stayed away from the US dollar, basically. And I preferred to look at the market internals, AD, and tick, and look at these four main charts. Let me see if I can pull something up for you guys quick. I think I showed you it before, but I'll show you again. So this is basically the tick, or my like screener type chart. How I watch all of them at the same time. So I have the NASDAQ 1 hour, 5 minute, Russell 1 hour, 5 minute, and the US 30 1 hour, 5 minute chart. And I'm watching all these. And then I have a 4 chart of the ES. And then I also have the NASDAQ on a 1 minute on another chart as well. So I'm watching all of these at the same time just to see the relative strength of everything. And like I said, for a lot of this week, I saw the Russell going down, NASDAQ going up, and the internals were like sideways to weak. Then on the ES, I lose my conviction on the trades on the ES. So I'd rather just wait it out and not lose my profits that I've made in the past couple months. So yeah, I'll jump into the course content, and then I'll look at news, and then I'll go back over I'll do the dollar CAD, gold, and then we'll wrap it up. All right, so let's look at the course content. So last week I showed you like the intro psychology stuff, and this is additional intro psychology stuff that we added based on some of the readings I've been doing, and I'll recommend a book to you as well. And then next week during this session, I'll go over the more advanced psychology stuff, and then I want you guys to send me some homework from it as well. So last week we were talking about positive self-image, and then in addition to that, one of the important things that's unrelated to trading, but it's also related to trading, is your psychological well-being. So I'll get into why this is important in the next couple of slides, but your psychological well-being is composed of 4 dimensions: happiness, contentment, energy, and affection. So this is important, just being a human, being alive, having emotions. You want all of these to be as high as they can be, and you'll be a happier person and have a better well-being if you have all 4 of these things. It's difficult to have all 4 of these things be at their highest level, and usually 1 or 2 will be lacking slightly. But if you have a chronically low dimension of any of the 4, that could result in greater disruptions in mood and performance. So if you're not happy or content with yourself, that can really destroy your mood and performance and your energy as well. This is all adapted or taken from this book, Trading Psychology 2.0 by Brett Steenbarger. I'll show you the book in a moment. If you want more in-depth analysis of everything, you should read this. It's a fantastic book about trading. So one of the concepts, positive experience is not the opposite of negative experience. So exercises that can help reduce negative emotional experience, such as relaxation techniques to lower stress, do not necessarily bring joy and affection. Similarly, we can find energy and affection in a good relationship and still experience significant stress in our work. Simply coping with stress is not sufficient to fuel performance success. So this is like the most important idea, is everything that we're doing in this course and to help you be traders, we're only showing you how to really cope with the stress of trading. But the idea is that you have to go and create happiness in your life in other ways other than trading. So we can't help you with that. So in order to lift up your 4 dimensions, there's other things that you have to do and make habits of in order to raise your psychological well-being. So coping with stress is really good, and we're going to give you all the tools on how to do that, but it's not enough in order to increase your well-being. So positive well-being leads to more disciplined and energized traders. So Brett Steenbarger actually referenced the study that they did, and the more positive your well-being was, the more happy you were and the more energy you had. But the most important thing for trading is it made you more disciplined as well, because you had more energy to stay more disciplined. So how do we make our well-being more positive? So keeping active physically, mentally, increasing quantity and quality of relationships, practicing mindfulness, and reducing negative emotions. So again, we can help you reduce your stress. We're going to have some techniques, especially next week, we're going to go over to help you do that. But these are some of the things that you can do by yourself, and maybe you have to do a little bit more research. And these things, practicing mindfulness, can actually increase your well-being. In the book, he goes way more in depth on this topic, and he found that meditation and yoga can actually increase your heart rate variability. So it actually has like a physical change to your body, which the higher your heart rate variability is, they found that the healthier the people are physically and mentally. So super important. And these different things as well help you be more mindful. So mindful of your emotions while you're trading. So I actually do yoga every morning before I trade, just 10 minutes. And you can just look it up on YouTube. I do like a 10-minute meditation and yoga. So it's like a combination of both of them. And I find that that works better for me than just plain meditation, because I can't focus as well during plain meditation. My mind wanders and I'm just sitting there and I think about a million different things, and it's not very helpful. And then self-hypnosis and biofeedback exposure. So these are more advanced things. I would definitely start here with meditation and yoga. I'm sure you guys have got recommended this before by many other traders. One of the traders in the office who's very successful, he trades the NASDAQ and makes a lot of money. He does yoga every morning. He was a MMA fighter a few years ago, and he found that his previous mindset of being an MMA fighter made him too aggressive. So yoga helped calm him down. Self-hypnosis, it's a weird one, but I've been doing it and I find that it helps as well. So you're kind of like tricking your own brain to get yourself into another mindset. So the exercise that you can do for self-hypnosis is sit in a chair with your palms like around stomach height, and you face your palms toward each other, and you pretend that there's a magnet pulling both of your palms toward each other very, very slowly. And you want to think about the mindset you want to be in. So think about being calm, think about being focused, and you want to really regulate your breathing. Slow your breathing down like you're meditating, and bring your hands all the way together while you're thinking that. It should take like a minute and a half. And then bring your hands together and just think about being focused, think about being calm. And the idea of doing this is, if you train your brain enough to do this, while you're trading and you get an increased heart rate, you get nervous, your emotions get the best of you, you should be able to bring your hands together like you do at the end of the exercise. And it should trigger your body to be more relaxed because of your training. Be more calm, be more focused, slow your breathing down. Those things can help your actual physical well-being by decreasing your breathing rate, because when you're in like a fight or flight mode, oftentimes your heart rate increases, your level of breathing increases. So those things could help calm you down. And then biofeedback exposure is basically putting your mind back into a situation that was very stressful for you. So sit in your chair and think about losing a trade, or how I felt during this moment where maybe I lost 3R in 5 minutes, or I blew up an account, or whatever the situation is. I accidentally risked 3 times what I was supposed to. And you're thinking about a very stressful environment, but your breathing is very slow and your brain's calm. And basically, you're teaching your brain to, and your body to not overreact in those situations when they happen again in the future. And then this is a big one. I've been doing this as well every single day, journaling in the morning, journaling at nighttime, and practicing gratefulness. So, a lot of the big traders, very big and successful traders, actually practice gratefulness. And there's multiple books on it as well. And multiple studies that Brett Steenbarger showed as well in the book about gratefulness. And just the idea that the more grateful you are as a person, uh, the more positive your outlook is. And it actually relates back to your psychological well-being. It makes you a more positive person in general and gives you a better well-being, gives you more energy, all those different things. So in my journal, for example, when I journal in the morning, I write what I'm grateful for, just one thing. I write about what I expect to do during the day and what I look forward to do during the day. And then I write another thing I'm grateful for. And then when I journal at nighttime, I write what happened during the day, any emotions I had. And right before I go to bed, I write one thing that I was grateful for during the day. And they're all little things, but all of them can help. And then through training, we can become the masters of our cognitive, emotional, and physical states. So I can only help you so much with the emotions that you get while we're trading, but the rest of it is going to be up to you to learn and to do. So, like I said, next week I'll go more in depth on everything, and then I'll get some homework from you guys to help you guys out. And then this was what we went over last week. Here's the book, Trading Psychology 2.0 by Brett Steenbarger. I think it's on sale right now. Yeah, it's $30. I think it was like 60 before or something. I will say it's a pretty difficult read. It's like a textbook almost, but I'm almost done with it. I would say it's pretty worth it. It's pretty good. Opens your mind up to a lot of different things. Um, so I'd recommend it. I'll have a link for it on Discord at some point as well. Okay, so jumping into the economic announcements, news for this upcoming week. The major news, if we're trading for the futures market, will be on Wednesday. We have CPI for the dollar. Very, very important. We could have another slow Monday and Tuesday. There's not much news going on until we have the CPI news, which could speed the market up a little bit, and hopefully we'll return to some of our volatility that we had a couple weeks ago. And then if you're trading Forex, there are a bunch of monetary policy statements coming out. So Aussie statement, and then we have CAD statement, and then we have Swiss statement, and then we have Euro statement. So it'll be a massive Forex week. Hopefully that can add some volatility for us for the futures market. We'll see. Alrighty, let's do dollar CAD, and then we'll jump into gold, and we'll wrap it up. Do you guys have any questions on anything I covered? Do you guys do any meditation, yoga, mindfulness practice, anything like that currently? Not yet. No. Yoga. I find meditation to be quite difficult. Uh, I find like guided meditation to be easier. So someone's speaking to you and telling you what to think about, how to breathe, all those different things. If it's just regular meditation where I have to sit there and like be quiet, I can't do it. But that's something that you have to train and practice for anyway. So got to get better and better. Gratitude journal, that's good. Do you find the yoga helps you, Lori, and the gratitude journal helps you, Wayne? Yeah, that's good. I find I find everything difficult when you're adding all these new habits to maintain all of them, but I definitely find that they help all of them. Exercise daily, emotional freedom technique for stress and negative emotions. Awesome. Well, what's the emotional freedom technique? If you can elaborate, because maybe that'll be useful for some other people as well. But I find that the journaling and yoga, meditation, all those things, the most important thing you get from them is mindfulness. So the ability to understand your own emotions and understand how you're feeling at any given time. And that's so important in trading. So next week when we jump into it, it's about identifying your emotions. Um, that's the first step to overcoming those emotions. You have to be able to identify them first. So that's why mindfulness is big. Meditation twice a day for over 50 years. Wow. That's unbelievable. Well, I assume it helps you then, Rich, if you're still doing it 50 years later. That's good. Oh, wow, Sharon. Okay, I'll look into that. I'll look it up. Because if it's something that works for you, I can try it and then maybe we'll add it into the course as well. That's good. Yeah, of course. Yeah. I'll get Kareem to tell me the next Wednesday session, and then I can come in and see all of you guys, and then you can tell me about it. That's good. I think one of the number one things too to be successful at trading, either mentally or on the charts, is to listen to everyone and try everything that you hear people telling you to do because you don't know what resonates with you. Awesome. Yeah, that'll be really good. I mean, we could do it all together as a little group session. I'd love to learn. What am I doing here? All right. On a dollar CAD. Okay, this was the chart where we had the big 2 year range, and it looks like the buyers are still in control, um, like we expected. So we had this big selling wick before, and I remember saying we don't know if this is going to be a rejection, a double top, and basically a fake out to long side and a failure, and we could see downside range expansion, or if the buyers will maintain control. Um, but we have to put the onus on the buyers because they did break out above this big range. And we saw price pull back into the high over here, this previous wick, and then give a continuation away. See, that's why this is a good example, this chart, of chart context and understanding the chart because we had a 2 year range. We broke out above the range. We got this massive candle to the upside, but it got taken away very, very quickly and it left a huge wick. So this was the big wick on the higher time frame. Now, generally, when I see a big move get wiped out this quickly, I am more cautious and don't want to go long again as quickly here. But the overall context of the chart, breaking out of the 2 year range, the lower time frame price action here matters less to me. And I'm more willing to be aggressive in taking longs because of the higher time frame. All right. Now we have a couple ranges here that we have been forming. So we have the smaller range here, we have a bigger one that has been forming, and then we have this balance area that was forming. So we're going to have multiple levels based on those balance areas. So we have this level that was already drawn out. This is the bottom of the big balance area. We have this big level, which is the bottom of this balance area. And then we have this new support area. It was previously resistance before price broke through it, which is the top of this balance area. And it could act as the point of control of the bigger balance area. And then we will have a level inside here, which is the point of control of the smaller balance area. So we have the small one here. This is start of a directional move. We have resistance and support, resistance, support, resistance. Didn't quite touch in here. Support twice over here. Resistance, support, support, resistance, directional move. Let me get rid of these. Okay, big directional move here. We can draw the fib line from bottom of the directional move to the top. And now going into this upcoming week, we have to see, are we going to create a new range here, or are we going to break out and continue to the long side? Now, I think we could eventually at some point next week continue this upside move because of the higher time frame context. So we broke out of the 2 year range. We broke the top, consolidated a little bit, and then we're seeing this big upside bar. So could we see continuations above there? Now, we will have to go to the left and look at some of the higher time frame resistance areas. So we have this big balance area. This is another massive balance area, a couple months probably in here. Now we could split this zone up into multiple levels. So you could have the very, very top of the balance area with this wick, and then you can have a level. You could take it like that. I want to include this little wick here. This little wick right here. And then include all the bodies of all of these candles here at the top of this balance area. Now I would be going down onto the lower time frame to refine this level as well. But just as a general idea, that would be the level. This is a major pivot point. This will be an important spot. Again, you could take the top of the wicks, go down onto a lower time frame to refine it, and then you could have a level here like this, and then thank you, Lori, and then have another level inside as well. This is the wick in the closet level, and it's also the start of the directional move to the downside. Okay, those are much higher time frame levels. They're pretty big. Again, you would want to refine those areas. But that's the general idea on this chart. And these levels might not hold if we see a lot of strength stepping in on this market. All right, let's jump over to gold. Oh, wow. This one has been very bad. So it looks like it was moving with the futures market, which was not moving very much. So it just went sideways. So most of the levels hold here on gold for the upcoming week. Just the major principle changes a little bit. We see this range forming. Again, this chart is a little bit difficult at this time to know who's really in control of the move. So we have swing from top to bottom, and then we have swing here, and then we have a swing here. So this swing from the buyers has not been invalidated yet. It like just came to the 61.8%. And then this smaller swing to the downside also hasn't been invalidated yet. So for me, the big sign will be who can break this range. Are the buyers going to break the range, or are the sellers going to break the range? So if we have something like this, move it down a little bit to account for more of these highs, or you can split the level into two. That's up to you. You have the balance area low. This is right around the point of control. It's not a great level at this point because we kind of chopped up inside of it right here. This was a smaller balance area that has worked well as support. So in here, we created like a smaller range, and this is the balance area low of that, and it held here and here as well nicely. So it'd still have that level. But basically, the major idea is, are we going to break out above it, or are we going to break out below it? And once we do either of those, I think we could either fake out and go in the opposite direction, or can continue to the higher time frame levels of either here or here. And then for this one, probably get down into this level. And then eventually see continuations in that direction. There's not much more to say on this chart, honestly, from last week. Do you guys have any more questions for today? If not, we'll wrap it up. And then next week, we will do more psychology stuff. And then hopefully by the next week, I'll have the other psychology stuff ready to go as well. And you guys will have sent me some of the assignments I'll give you, and we can work on all of that stuff going forward. Awesome. Thank you, Yvette. If you have any questions during the week, just let me know. And yeah, be cautious trading this upcoming week. Let's see what the range is going to be like, if we expand or not. Awesome. All right, everyone. Have a good rest of your weekend and good luck trading this upcoming week.